All right. How you guys doing today? Welcome back. I'm a little bit late today. I was supposed to be on at 3, but I do apologize for that. Had some work to do. All right. So, what's going on in the markets? Well, in the equal weighted ETF, there's not much going. There's a high base, which is good for the bulls, right in here. Okay. So, it's high basing, it's correcting through time. It did break the trend line, but again, it is correcting through time. Same thing with the dividend weighted ETF. The VIX spiked a little bit, but nothing dramatic. New York Stock Exchange, we see the same pattern, right? So it is high basing, correcting through time. Even if it were to fall through price, you're still bullish, right? So keep that in mind. Dow Jones, within this wedgie looking formation, this perhaps has one more to go up. So this would be the one, this would be the two, and then one more up, three, and then look for downside from there. Don't be confused by this line. This line here is, um, yeah, I'll pull it out so you can see it. Okay, it's just the previous channel. Okay, at this point within this structure, and again, this is a daily. Within this structure, price can fluctuate for a long time. All right, let's go back to an hourly. S&P 500 again, high basing towards the top here. Nasdaq, it's not as defined, but it is very happy in the point of control. Okay, this is the point of control. The point of control is where the most amount of trades went off. Quite content. I don't know what to make of this one. This one I think needs more time to tell us what is going on. And the reason for that is we needed to have a correction from this move here. Okay, so we have the structure in place. This needed to correct. It's correcting through time, but it's not something uh, that I can define, right, in terms of waves. Um, at best, again, we can call it some kind of a high base. Earlier this morning, it did break down. Okay, usually when it breaks down, it just keeps going. When it comes back into structure, it's not what happened, and the reason it didn't is because we had this high base here, right there. Okay, so it came in, tested it, and then rejected. All right. So you know, is this now the new uh, high base, right? So this would be called stair stepping, right? So it goes up, consolidates, goes up, consolidates, goes up, consolidates. Okay, this is stair stepping. This is, in my best estimate, something that will look eventually like this. Okay, it would look like a rising F flag within a rising F flag. This again, this is speculation. I don't know if that's going to happen, but uh, this is what it would look like. Okay, correcting through time. Now, if it breaks out, that's incredibly bullish. Okay, this whole structure in here that is supposed to be um, correcting to the downside will instead become incredibly bullish, and then off to the moon it goes. And then it becomes a different story because as long as price remains above the previous high, okay, then you want to be long. All right, that's going to be the key in terms of going long. Again, I remind people, you never want to be the hero. Okay, you don't make money in volatile times like this. Okay, you don't make money in volatile times like this. You make money in these kind of moves. Okay, so that's why I remain and say you want to reduce risk until something else uh, comes along, everything starts to stabilize, and it's a lot clearer as to what you want to do, what the direction is going to be. And, we can sit here and talk about vaccines and, oh, that's going to save us. There's a lot we don't know about vaccines. Number one, We don't know how long it's going to last. We don't know how bad the side effects are going to be. Some posts are saying, "Oh, it's pretty bad." I never listen to those things because they're clickbait, right? Three, how long is the immunity going to be? Um, there's so many, how many people are going to take it. There's so many factors uh, to consider. So we're not. I don't trust anything based on what people say. That's for sure. When it comes to that, I'm a meathead. I don't run with the crowd. I wait, let it prove it to me, let it show it to me, and then there'll be plenty of time to behave accordingly. But again, I point out that we were here, broke down, came here, broke down, came here, broke down. Now we're back here again. Likelihood is we break down again. This is a very big sideways move. Stand by, please. Okay, sorry about that. Had to take that call. So yeah, so right now it looks very bullish. Everybody's excited. There's no shorts left. They've been absolutely annihilated. Okay, so it especially for a novice, this right here, they're creaming in their pants right now. Oh, this is going to take off. This is going to do this. You can't do that. You can't do that. You got to set up your risk rewards. Okay, this is actually the best time to be shorting because you don't know if it's really going to break out or not, because the bias is to the downside so long as it remains in hither. All right, as long as it remains in here, the bias is to the downside. Now we know from this whole entire structure, the point of control is all the way down here. Okay, around 11,450. We had a very huge spike, came back, it's correcting back up, double topping, and now you start to look for downside moves. All right. Now this is a 14% range that we've been in. Very volatile. 14.42%. Now, uh, George Soros famously said that turning points occur uh, with volatility. This is quite volatile, right? We can see that. So, you got a lot of conflicting information in here, and that's why you're seeing this volatility. You see the VIX is all the way down, and price is all the way up. And then when it comes all the way down, volatility goes up, right? And price comes down. So let it let the data tell us what is going on. Don't tell the data what's going on. Don't start front running, speculating, and so forth. Soon enough, we're going to have enough clarity. Taking a look at the small caps, they've been in this funky kind of bullish flag, I would call it. But it's funky looking. This is not something that's I don't want to say measurable. It is measurable, but it's not. The structure is a megaphone. And megaphone, when they're asymmetrical, uh, indicates confusion. They don't know what to do next. We had pointed out that this area right in here, which was multiple resistance, would behave as such, and it did. Now we want to look at this as a high base because I don't think the structure is kosher. Okay, so as a high base, so we can say this was some consolidation. Again, it's that stair stepping thing, right? Consolidation, break, consolidation, break, consolidation, right? What's next? Possibly break, all right? And then another consolidation. So we have to give it time. Now, The structure in here, the 123, did have to correct, and it's correcting through time just like everything else. Transportation's pulling back a little bit. All right. That's what it's supposed to do at the previous high. This is most interesting here because we broke out yesterday, came back into structure, try to break out again today, coming back into structure. So what I'm thinking here is that we're uh, fast approaching a dual resistance area right here. And if it keeps trying to pop out, then eventually it's gonna fail. Okay. Now is it gonna break this trend line? I don't know. The entire wedge, I don't know what it's gonna do. But what I can tell you is that um, the likelihood of breaking out right now, the way it's behaving yesterday and today, is weak. Right? It's two questions you got to ask: what's it trying to do, and how good of a job is it doing? And right now, it's not doing a very good job. So keep that in mind. Give me 1 second because I didn't pull up the chat. Hello, Mark. Long time, my friend. Alessandro, how are you, my friend? ¿Qué pasa? ¿Está bien? All right, great. So let's see how this is going to behave. Because remember, this is the market leaders, and you want the market leaders to lead. All right. So we'll see. Again, point of control, and I don't think I've expanded it, but point of control is all the way down at around 5,400. So we're way above it for now. World Stock Market Index continues to plow higher. Okay. Airlines pop up again. We're seeing the same kind of structure all across the entire markets. A nice little high base. Okay. High bases are bullish. Okay. Now, quickly, let me just talk a little bit about airlines. Let me stop here. When when you're looking at airlines, the Jets ETF, this is heavily weighted towards U.S. airlines. Uh, Delta is 10%. I think Southwest is another 10%. I have it somewhere here. I don't know if I put it in this. No, I didn't put it here, unfortunately. I'll find it. Perhaps I'll show you to you tomorrow because I don't want to waste too much time. I came on a little bit late. All right. Uh, stupid S&P will rising. Everything is perfect. Yeah, yeah. The S&P is just, and we'll talk about that in a minute. Here. Okay. All right. So we know that the traffic in airlines has been extremely weak. It's down as much as 40%. I'm sorry, 60%. In Europe right now, they're trying to get rid of this red states, green states, caution states because it creates a restriction in travel. So if you want to go from Austria to, I don't know, Spain or something, and Spain is red and Austria is green, then you have to go to Spain and sit there for 2 weeks, quarantine before you can move about. EASA, which is the governing body of aviation, and the European CDC came out jointly and said, get rid of this restrictions. It's not required. Air quality is good on an airplane. All the mitigation steps have been taken. Open up. Okay. Now the problem with that is that humans have this tendency of thinking, oh, damn, government regulation is destroying everything. But that's not the case. It's not the case because here in the United States we haven't had those kind of restrictions. But we see the same exact results from the EU, where aviation is down 60%. I think, is it this one? I'm not sure where it is. I have it somewhere. It's open right now. I know that. So let me find it really quickly. Let me find it because I think it's important. So what I'm driving at here is that it's not so much that people are scared of COVID or whatever the case may be. It has nothing to do with regulation. It doesn't have anything to do with that. What it has to do with is again, I'm going to say it, the social economic impact, right? If you're afraid that you're not going to have a job, you're not going to be going out on vacation. Um, Here it is. Okay, you're not going to be going out. If you don't have a job, where the fuck are you going to go? Okay, so this is the TSA numbers. Okay, they're horrendous. From where they were last year. Okay, so it's a big difference. So again, you compare that to the EU, it's the same thing. It's the same thing. Um, it's a disaster area. This is what the actual forecast right now, as it stands, the models that they use, which includes, by the way, let me get rid of that, which includes, by the way, vaccine. And they're not showing air travel to return until 2024. Think about that. 2024. Again, it's the scarring, the social economic impact that COVID had into the world economy that matters. It's not so much COVID in of itself. People don't understand that. I don't know why, but there's going to be a lot of scarring. There's going to be a lot of damage done to the economy, and you can't just print that away. You can't do it. Unfortunately, you can't. Today I posted this. Oops. All right. So we added 4 trillion, which includes Social Security, but it doesn't matter. 4.234 trillion was pumped into the economy, mostly within a few months. You've seen corporate profits at all-time highs. Corporate profits have been flat since 2012, and then suddenly now they're at all-time highs. Why? Because people are running out and buying? Of course not. It's got to do with government intervention, right? So these are corporate profits. What about employment? Employment is way down. We've been open for a while. It's not like we haven't been open. Look at what levels we are. Every single time that the employment levels were just above 60, oh, it was catastrophic. The world is coming to an end. Even 2008, it was what, 59. We are so far below that right now, and yet corporate profits are at all-time highs. MMT doesn't work. I'm sorry, it just doesn't. Okay, so again, I'm making the emphasis that it's going to be a long recovery. Perhaps it's going to be a little bit faster than what EU is forecasting, maybe. Okay, but even if you remove the red and the green and the yellow and whatever restrictions, you're not going to go back to flying in the same manner that you were January 2020 anytime soon. What does that tell us about the economy, right? Because airlines are very economically sensitive. What does that tell us? It tells us that the economy is not going to recover in 6 months because of a vaccine. It's coming. It's going to be over. No, no. Now, I don't want to be Debbie Downer here because there's always going to be a part of the economy that's going to suffer, and then there's going to be a part of the economy that's going to do very well. I get that. I do. But again, overall, when you're measuring all the 95% in the productive economy, okay, travel is important, and travel tells us about the state of the overall economy, the productivity of the economy. Okay. Uh, Again, I'm going to point out that it's 68% consumption. GDP is 68%. of GDP is consumption. So you need to maintain 68% consumption, that high level. How are you going to do that if people are not even willing to go on vacation and air travel? Hotels are the same. Europe is the same. So what does that tell us about the global economy? Um, I don't know. Uh, to me, I would think that given the lockdowns again, given the death rates again, given the slowdown in all the economic data, that the stock market would have reflected at least a little bit. I'm talking about, I don't know, 10% down based on this slowdown. And it hasn't. It hasn't. So the only factor that I've seen push the market higher, besides the usual stimulus, QE, repos, blah, 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 has been this tweets. Right? The constant tweets. This is something that's fairly new. Because if you remember back in 2008, when it was not even nearly as bad as it is today, they used to come out every single day and tell you that, yeah, we're going to stimulate this, we're going to stimulate that, we're going to do this, we're going to do that. And price kept falling every time they would say that. Fast forward to today, and you see the opposite. You see that markets are rising every time they come out. One day it's going to be vaccine news, the next day is going to be stimulus, the next day is going to be vaccine news, the next day is going to be stimulus. It's the same thing with China trade deals that we were dealing with before. Okay, look at that. Is the market up because of China trade deal? No. This China trade deal had nothing to do with what's going on now. The economy is 1,000 times worse than it was back here. But for some reason, algorithms respond to it. And the politicians have figured this out. And we used to think this was a Trump thing. Well, guess what? Biden comes out today and yesterday and says, "Oh, guess what? Whatever stimulus is passed now, it's peanuts. It's just the beginning." What did the market do? It soared higher. So as long as these tweets are, they're working, and this was 2 days ago actually. Okay, this is what happened when he made that statement. Market was falling, and then suddenly, boom, up to the moon. So I think now, beyond the economics, beyond the stimulus, beyond the real QE and money printing and so forth, that we really have to start factoring in these tweets. There's no other explanation. You can't. This doesn't even make sense in anybody's mind. It doesn't. Um, so as long as those tweets, we see them behave in a positive way, we have to start to factor them in. As bad and as horrible as that sounds, and as annoying as that sounds, we have to. It's part of the analysis now, because it's not just a Trump thing anymore. When Biden is doing it, then it doesn't matter. So just something to keep in mind, okay? Doesn't mean that markets won't come down, but they know how to manipulate markets by saying the right words, the key words, stimulating algorithms, and then boof, up we go. All right, let's continue. So China, again, very volatile. Right? You had the big pop, then you had the big drop, then another pop. Now we're in this rising kind of wedgy looking pattern, still within this consolidation. Well, the algorithms that they use, Jacob, are based on text. And if these texts have certain keywords in there, the algorithms will start working immediately. They will react to that tweet. And it doesn't have to be a tweet, it can be any kind of news kind of driven. I call them tweets because they usually come out in tweets with Trump, but it doesn't matter. When somebody says it's going to say stimulus or something like that, it's an automatic buy. There's no fundamental analysis associated with it. It doesn't matter. Uh, and remember, when you look at fund managers, they they are they want to keep their job, right? So they have to at least perform like everybody else. So it's their incentive to not stray away from the herd, or they won't have a job next year. If their performance is not the same as everybody else's, plus or minus whatever, then they get fired. Money gets pulled from them, and off they go. That's what makes Buffett so different and so much more successful. That he doesn't give a shit what people do. He just goes out, he buys whatever he thinks is value, and that's it. He doesn't have to meet the criteria of, oh my God, I have to perform this month, X amount because everybody else did. Oh, market fell, doesn't matter because I lost X amount like the rest of the market, I'm good, right? They're not going to go stray away from the herd and be like, no, this is bullshit, I'm shorting, because they're going to get killed. So, like I said before, anybody that shorts, this is a very, very, very hard game because everything and everyone is against you. Nobody wants the market to go down. The market is going to probably go down, you know when? When everything kind of settles down, the stimulus starts going away, when everything goes back to normal, and then they assess everything, and there's no more of these tweet bullshit, and then you'll probably go into a sideways stagnation or a pullback. That's what I'm thinking. I don't know. I mean, I'm pulling shit out of my ass here, but that's what I would think, would occur. But these news events uh, are really, really deadly. They're deadly. All right, let's continue. So, emerging markets resisting. Okay, nothing there. Uh, Japan is doing good. Australia trying to make a move back up. Nifty 50 still holding up. Cosby's pushing even higher. I don't know why that's there anymore because now we've broken out. Well, no, my bad. I'll put it back. It's still a double top. Remember, when you're looking at time frames that are bigger, the double tops may have a bigger percentage move, but they're still double tops. Doesn't matter that it's 5% above the previous high. That's insignificant because if it was a smaller time frame, sorry, if it was a smaller time frame and it behaved faster, and you would see something like this, this is still a double top. Okay, it's just bigger time frames, bigger moves. You're going to see bigger percentage gains above the previous high, but they're still double tops. There's a point where you say, okay, this is excessive, but anyway, just keep that in mind. That things happen slower in a bigger time frame. Europe breaking out, nice and solid. Wave three, right? This is the wave three. One, two, three. Nice breakout. Germany, still stuck in this rising flag. All right, nothing new. UK pushing back up again, right? This is a failed move, comes fast move in the opposite direction. This was supposed to start to correct. It's already there, so I don't have to even print it. Denmark stuck in the F flag. Um, the BRICS are still holding the support line. Taiwan is pushing higher. Brazil is actually pushing higher than the previous high, but this is not a valid line. And the reason it's not a valid line is because we're in wave three. So this is a one. This is valid. This is a point. We have a two. This is valid. Okay, fair enough. And now we're in a three. You cannot anchor the top line until the three hooks over. So we have no hook. All right. This was only here for visual, uh, you know, beauty. All right. I should probably start getting into a habit of changing the color or something. I don't know, make it purple or something, or maybe a different color, maybe like light blue or something. Gray. I don't know. Looks gay. Maybe something like this to indicate that this is not a valid. uh, a valid trend line. Okay, maybe I'll do that. Yeah, December 13th. Apparently, they're going to announce the FDA approves it, blesses it, does whatever. I don't know. Bring some priests over, throw some holy water. It was supposed to be December 10th, I think. Good vibes. They keep changing these things. Again, it's a very long process, a very complicated process. There's so much more we don't know about this vaccine. Again, call me a meathead. I am. I'll be the first one to admit it. Until I see it implemented, working, everything's going smoothly, I don't trust shit. You know, I don't trust shit. All right, skip this one. Saudi is pushing higher. Oil, I'm very interested in oil. And I'll tell you why I'm interested in oil. First of all, it has this very nice bullish setup. We've had this on now for I don't know how many days, right? Um, maybe about a week. All right, so we had a nice little setup here. 1, 2, 3 down. I'll be technically correct. All right, so it's the first counter move. 1, 2, 3. Points in one direction is going to do the opposite. All right, that's great. So the charting looks good. The problem is that when you look at the dollar, dollar's falling, right? And we're going to see that here in a minute. So why hasn't this really pushed up higher? I don't know. Same thing with gold. Why hasn't gold pushed up higher? So, did they front run it? Um, you know, I don't know what the answer is. I'm very interested in it, but again, I have hesitations because look now, beautiful breakout. This should have did something like this and took off. Instead, it comes right back into structure. So that makes me nervous. That makes me nervous because that's not the kind of price action you want to see. Now, there is a price action where you're going to have a sharp 1, 2, 3 up. Okay, and that's still valid. And believe me, if this hooks back up and breaks this trend line, I would like to get involved. I would like to get involved in this because this is going to take off for another push higher. If we are to go back to this perceived normal in July, which I doubt highly, but let's pretend we do, and let's trade as if we will, then oil should be in the 50s, not 45, right? Oil is based on demand, on global demand. So why isn't this breaking out? I don't know. When you pull away and you kind of look at the previous high, okay, you're holding above it, which is wonderful. That's good. That's bullish. This is a high base. So why aren't we taking off yet with the dollar falling? If the dollar wasn't falling, okay, I could understand it, but it's falling. So why isn't this thing taking off? I don't know. I don't know. Gold and oil and these types of stocks or commodities, these asset classes, they're not they're not as simple as people make them. For example, oh, the dollar's down by oil. Dollar's up short oil. Yeah, it's not like that. There's a component, gold for example. There's a component of inflation. There's a component of fear. Uh, you know, there's a component in oil that is based on global demand. There's a component of fear. Okay, you don't know which one is doing what. It's not possible for us to know it. So for right now, now that we've seen gold drop, we know it's not because of monetary inflation. We know there's monetary inflation. So why did it come down? Well, it's not because of the the people who fear inflation suddenly decide to sell it. It's the people that used gold as a fear indicator who bought, who overwhelmed the people who bought it for inflation. Make sense? And we'll look at it here in a minute. All right. Um, People that are buying oil now uh, is not necessarily that they actually believe that there's going to be economic growth in the future. They're buying it more because the dollar is falling. The problem is what I suspect has happened since that big crash here is that OPEC countries or oil companies started to hedge their own oil. They started betting against their own oil to lock in a price. And that's why you saw this big consolidation in here. Okay. Um, it did break out, so they're starting to slowly unwind that hedge. Okay, so we should see higher prices. But then again, you start to wonder, do they really believe that, you know, the dollar is not going to fall much? That uh, the dollar is going to bounce? That we're going to have economic growth? That there's not going to be monetary inflation? That there is going to be monetary inflation? What are they thinking? I don't know. So I view this a little bit as manipulated right now until I see the follow through. Okay, so we want to see that follow through come through because that's what should happen because the dollar is falling. Uh, this should push higher. Bitcoin. Expect a little bit of a correction. I've been saying that. All right. Yes, we made a new high, right? We keep making these new highs, but look at the structure. Tight. It's very tight, starting to get very volatile here, correcting through time or whatever the case may be. It needs to correct. This structure in here needs to correct. Whether it's going to be a high base or it's going to be through price, I don't know. But it does need to. So, we're right up against the longer term resistance area. And again, this one now is valid because there was enough of a hook to validate it. And as we saw, the second test failed. Okay, so the structure now is valid. Let me change the color on that one, make sure that it's blue. Okay, it's blue. So this is a valid structure, 1, 2, 3 up. All right, see it? So now this needs to correct at some point. Uh, we don't know when this will correct, but it will. It will. And then it'll continue higher. It'll continue higher because this is the 1. This is our compass, right? This is the 1. This was a 2. Okay, this is a 3. The 3 is going to have 3 waves. It's not, yes, we have 3 waves in wave 1. This whole entire move here, the breakout, is only wave 1. Then you're going to get wave 2, and then you're going to get wave 3. And then after wave 3 is done out of here, then we're going to start looking for downside. Right? That's why we said, this is probably going to go to 27,000, maybe even 30,000 in Bitcoin. Right? But it's not going to happen tomorrow. Got to be a little bit patient. And the most immediate structure that we can see in here, okay, is this tight, 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 needs to correct, and then look for upside. So don't have this sensation like, oh my God, I'm missing out on Bitcoin. I got to run out and buy it. No, wait. There's going to be more clarity. Ethereum is in wave 3, right? This is what we talked about. It's in wave 3. Okay. Litecoin, sharp 1, 2, 3 is what it appears to be doing, which is a sharp 1, a sharp pullback 2, and now 3 is going to continue. Ripple, this thing went to the moon. I don't even know what the fuck this is, to be honest with you. All right, let's talk about gold. So in yesterday's video, we said, look, you need to wait until gold starts to break out of this, because now we have the 1, 2, 3 down. What is this showing us? that is pointing down. So the next move should be what? Up. Okay. So it's going to begin with a hook, and that hook is going to break the trend line. So here's the hook. There's the breaking of the trend line. This is now valid 4 points, right? So we can validate the structure and look for upside. All right. All right. Let's skip this. Real estate, not doing much. Commodities, high basing. Um, Palladium, doing nothing. Copper is pushing higher. Base metals pushing higher. Agriculture, a little bit of a pullback. I wouldn't worry about this. I think this is a buying opportunity. Um, Precious metals, it's the same structure, right? 1, 2, 3 down, doing what gold is doing. So look for more upside in precious metals. Okay, I should actually put that there. So next time we visit it, I don't have to say it. Okay. Commodities overall, okay, high basing. Sugarcane, we're still waiting for a correction in sugarcane. Corn, same thing, we're waiting for a correction. Wheat, it's already correcting, and I think this may be the bottom. Okay, we had 2 down days. It broke. Okay, little head and shoulders in here, right? Right, so that broke. So now that satisfies the correction for this structure. So now we're going to start looking for upside. Steel, pushing higher. Fantastic. Soybeans, a little bit of a pullback. Now finally let's talk about the dollar. And here's where everything, comes to a head. You cannot keep printing, pushing stocks higher, little effect into the real economy, as I showed you before, right? It's not what I wanted to show you, but anyway, don't forget to come down to Real Macro Economics and Investing. Subscribe. Please like and subscribe the video as well. I feel gay saying it every time, and I'm going to keep telling you I feel gay. But not that I have anything against being gay, but I'm just not gay. But it's annoying to me that I have to say something like that. I feel cheap. All right, so like I showed, right? You printed all this money, you have very little economic growth. Unemployment is still very high. You have corporate profits kicking ass all over the place. We printed 4.234 trillion, right, which includes the Social Security, and yet, you know, stock markets are going great. Everybody's telling you how wonderful it is, but the reality is you can't do that without something breaking somewhere. And the breaking that is going on right now is in the dollar. Right? So this is the bigger view of the dollar. And, as I say often, that when you start getting that consolidation at the bottom of the structure, building that pressure right in here, eventually it's going to resolve to the downside. So this would be a 1, this would be a 2, and 3 would come. And that's what's happening. Okay. Which also adds to the bullishness of the market. Why? Because stocks are going to reflect um, a higher price when the currency devalues. And I've shown this before, and I think I have to show it again. Right. So let's see if I can find it real quick. It's almost 4 o'clock. Again, I'm sorry I came in late, but I think these are important concepts for people to understand. And I'm going a little bit slower today, but they're important. Where the hell is Istanbul? There's Germany, Taiwan. There it is. All right. So here you see that this is the Turkish index. Okay, and the Turkish index, their stock market is going higher in lira. But when you value the index in dollars, you're going to see a much different result. Here's Turkey ETF. Look at that. Look at that. You see? So their stock market is not really going up. It's just going up in terms of lira because the lira is collapsing. You see? Up means the dollar is higher and Turkish lira is weaker. If I were to change that, you see? This is the Turkish lira collapsing and the stock market going up. So a weak currency, a weakening currency, is bullish for stocks. That's inflationary because revenues are going to reflect the higher revenue, the higher operating profits, or whatever the case may be, higher um, profits overall, but in lira. It's not real profits. It's in lira, but the lira is devaluing. I hope that makes sense. Okay, so the dollar weakening contributes to the bullishness of the market. Now, the problem with that is, and we're going to see that here in a minute, is that you're seeing that the 10-year is pushing higher. It's trying to get to that 1% level. And 1%, I'm going to move the, the line right there. So when you're looking at a safe asset like a bond, and it offers you 1% interest, and then you're comparing that to the stock market, and the stock market is offering you 2.69, right? You're gaining 1.69%, but at a much higher risk. So why would you take so much risk on if interest rates are rising and they're much safer, less risky than stocks? Now, there's a little caveat to that, that the earnings of stocks are after tax, where the earnings on bonds is pre-tax. So just be aware of that. Little 15% difference there. Always got to factor in the taxes. Okay. So when you get this kind of compression, all right, when you get the bonds that are rising in interest rates and the stock earnings yield is falling, you get this compression. That's not good for the stock market. Now, you often hear that they will say that, well, we're looking at forward guidance, forward guidance, forward guidance, forward guidance. Okay, fair enough. Forward guidance. You can forecast on March 2019 that the forward guidance of the stock market in July 2020 is going to be this, X amount. But what was reality? Reality is COVID hit, everything fell apart. Those forward-looking things went out the window. So I don't like that forward-looking shit. That, again, I'm a meathead when it comes to that. Prove it to me. Show it to me. Okay. And once again, I'm going to go back. I'm going to point out the obvious. And the obvious is that back here, 4.5% earnings yield. All right. We've gone up substantially. That even if we went back to 3.4% unemployment, even if consumption was 68%, everybody's happy, everything is wonderful, okay, then that would mean that price here would be 4.5%. But we're not there. We are here, right? So then you're looking at earnings yield that is far less than 4.5. perhaps it's 3.25, even on a forward-looking basis. Maybe even less than that, assuming that everything works as planned and everything goes back to normal. You're still at 3.25, which is not going to happen. I'm telling you that for a fact. It's not going to happen. So where does that leave us? Somewhere below 2 again. Below 3. So forward-looking indicator, bullshit. I throw the bullshit flag on that one. Anyway, market closed just, at the point of control, just above it. Right. Nice little dip, denied, right back up, high basing. We're going to see what this is going to ultimately do. It's got this possible head and shoulders thing building for tomorrow, right? So the bias will be to the upside. Right, for one more up. We'll see how that works. Quickly, let's just take a look at the FANGs, how they doing. Apple broke out yesterday, didn't follow through. Amazon pulled back, tried to break out, pulled back. Microsoft still holding. It's broken the trend line, but it's correcting through time. And at this point, I'm going to start to say that this is a bear flag in Microsoft. First counter trend move, 1, 2, 3. We've definitely had the hook today, right? So this is valid. The whole structure is valid. It's pointing one way. We look for a move down. So in Microsoft, I would not be looking for upside. In fact, this appears to have been nothing more than a head test of this head and shoulders. So we're looking for downside in Microsoft. Facebook, not much today. Netflix, nothing. Google pushed higher today, looking good, broke the previous high. So now we move this to here, and you can see now that we're so far above the previous high that this is no longer a double top. Right? No longer a double top. This is a breakout, but it's a breakout in the context of this megaphone. All right. So let's get rid of this. So Google is looking good. How about Nvidia? Nice little breakout, but no follow through. Tesla, right? $600, having some difficulty, pulling back. Right? So there's not a whole hell of a lot in there that we can analyze. Airlines, let's take a look at them as well. Economically sensitive. A lot of hype behind airlines. Okay, so Delta is within this structure for now, and I should make this gray because it's not valid. American Airlines, nothing. Southwest, nothing. Alaska, nothing. JetBlue, nothing. Save, which is Spirit, nothing. Allegiant, pushing a little bit higher. Hawaiian Airlines, nothing. SkyWest, a little bit higher. Ryanair, nothing. They're all kind of high basing there in a small time frame. A little bit bullish on EasyJet. Copa, high basing. China Eastern, you can't see it, but there it is. Okay, just kind of hanging out there. Turkish Airlines in Lira pushed a little bit higher today. Okay, so we kind of covered everything except the currencies. So let's go over that for a moment. US dollar still weak against Japanese yen. Euro, beautiful breakout. All right, this thing is about to go. And again, you look at the dollar index, and we're saying that's going to go lower. It's breaking down, and of course, you're going to have a big breakout in the euro in the bigger picture. Okay, and it happened yesterday, and it's following through today. It's looking very nicely to the upside. Great Britain pound is the next we expect to break out. It's holding up in this area of previous resistance area. US dollar, Turkish lira will skip. Ruble is strengthening against the dollar. Canada is strengthening against the dollar. The loonie. I don't say these things. The loonie. Australian dollar pushing higher. Look for this to go ballistic on the longer time frame. All right. Years from now, you're going to see this sucker go wee. New Zealand dollar pushing higher. US dollar against the Mexican peso pulling back. Okay. US dollar won. We said yesterday that this was a bearish structure. Sure enough, it broke today. Okay. And then the euro index has also broken out. All right. Here. So look for a much bigger push higher in all currencies. Quickly, I just want to go through this. Well, maybe I can just show it, I think. Let me show it here. Because I posted this, I don't know, over a month ago. And I said, pay attention to the Southern American currencies. They're going to strengthen. And here they are. Okay. Uruguay, Brazil, Colombia, Chile. They're all strengthening against the dollar. Anything that goes down is against the dollar. Dollar is going down. All right. That was great. Euro Japan. Well, be careful with Euro Japan. And I'll tell you why. Because if the market starts to crack, oh fuck. If the market starts to crack, the euro will crash relative to Japan. All right. This one it's a lot uglier. But again, if something were to go wrong and the market starts to tank, everybody's going to run into the Japanese yen, and you're going to see the euro collapse relative to the Japanese yen. So be careful with this one. This one is not an easy trade. Take the simple stuff. Make it easy for yourself. All right, guys. Any other questions before I go? Again, I'm sorry I'm a little bit late. We went over about 10 minutes. Um, again, for right now, on the small time frame. Yeah, exactly. And I didn't believe that in the beginning of this pandemic. I thought we would do a much better job as a nation dealing with COVID because we have the best pharmaceutical companies in the world, the best research. We have the best of everything. And Trump just didn't want to deal with it. He put roadblocks in every which way possible. He didn't allow private sector to create a COVID test until February 28th. Think about that. That's 2 months. 2 months. And he knew it was a deadly virus. Right? And then the testing in March was peanuts compared to what it was supposed to be. Peanuts. For example, Korea had 130,000 tests. We had 2,500 tests. And we're a nation of 340 million, not 110, whatever Japan is. I'm sorry, Korea. Korea is 40 million. Japan is 130 or whatever. Roadblocks. And then they said, well, if you want to give a free COVID test, well, you have to do $1,900 of other testing first that you got to pay for. Rule out every other possibility that you're sick, and then you can get a free COVID test. See, people don't know these things. But again, what did that do? Well, it did two things. One, it reduced the amount of people that could get tested. Two, it clogged up all the testing facilities with unnecessary tests. Three, it made it very expensive for people to get the COVID test initially. Right? On top of all that, the tests that were pushed into the market were not accurate. They came from China. They came from all over the place. They weren't even American. And they allowed it. They just flooded the market with these inaccurate testing that had 16% accuracy. Horrible. Horrible. Quest Diagnostic, I think it was, or I don't know who it was. They were on 2020 talking about it. That, yeah, we thought that these tests were legit, but it turns out they weren't. So people were running around thinking that they're not tested. I mean, they're tested and they're negative. Meanwhile, they have COVID and they're spreading it. So again, when you look at the Trump administration response to COVID, it was fucking horrendous. It was a disaster. And that's why we are where we are today. On top of all that early bullshit, remember, we're supposed to be somewhere between 2 to 3 million tests per day. And we just recently got, I think, to 1.7 for a day or two, right? 9 months into this. Think about that. That's horrible. Horrible. Okay? So, on top of all that, it's a liberal hoax. It's just the flu. Look at me, I'm fine. The cure cannot be worse than the disease. Don't wear your masks. You have Karens all over the place. You get this libertarian, don't tell me what to do with my freedom bullshit. You get this kind of stupidity that goes on. And you can see it now because you can see New York, the death rates are very low. And then you look at the rest of the country and they're exploding. The red states, the Trump states, they're all exploding. These are the ones that are having the problems now. It's not the East Coast, right? So you get that on top of everything else. And why the fuck would you want to buy the dollar when you can't even handle your own pandemic? So initially, I thought we would do a much better job, that the dollar would actually be better than Japan, and then that was proven wrong. And then I flipped. I said, well, that's not going to work. You're printing all this money. It's not going to make a difference. You didn't lock down properly. This half-ass lockdown. Things change. So yes, now it is Japanese yen is still the safe haven. Yeah, it will go away in April with hot weather. I mean, the list, super spreader events with rallies, you know, 700 deaths were linked to them and 30,000 cases, I think. Last I checked on 3 or 4 of those rallies. And then people are like, oh, you're against Republicans, you hate the Republican. I'm not political. I don't give a shit. I don't like Trump. The guy's a disaster. Every single time that I sit here and I look at that number of 270,000 people dead and 11, 12, I don't even know what it is anymore, 12 million people infected, without knowing what the future repercussions are going to be. We don't know what the long-term effects of COVID is going to be. There's some evidence that it causes um, heart muscle to die, right? 50% of the autopsies, they found that there was tissue damage, muscle tissue damage, right? So we don't know what the long-term effects are for the 11 million. And all I keep thinking about is, had we just dealt with it in the beginning, contact trace, test, do all that bullshit, lock down, but really lock down across the fucking board, lock the fucking thing down for 5 to 6 weeks, we wouldn't have to be dealing with it 9 months into this, right? You don't do what feels good. The virus doesn't care; it spreads. You don't politicize a virus. You don't sit here and negotiate with it. You shut the fuck down. Fuck what people think. You know better. You know what science is telling you, right? And you shut it down. Doesn't mean it's going to go away. That's not what it means. It just means you're going to mitigate it substantially. Otherwise, you're going to end up exactly where we are now. That 9 months into this, we're still fucking dealing with it, and it's spreading like wildfire. And again, I'm going to say it. I would think, under these conditions, that the stock market would not be at all-time highs. That by now, we would start seeing the market collapse, and it's not. It's a simple truth, right? Evidence. Just look at the stock market. It's at all-time highs. There you go. Yeah, that's just the facts. What can you do, right? It is what it is, as Trump says. So anyway, that's it for now. Again, thank you very much. I'll probably see you guys tomorrow. I don't know how long I'll be doing this for free. Again, come down to patreon.com/RealMacro. You're going to get 24 hours a day live updates. A lot of great guys and gals there. You can come and join us. They've been with me for years. Recently, I've kind of opened up to the world. I'm not working, so I can do it. I have the time. I don't mind doing it, but at some point I'll go back to work and I won't be able to do it. All right. Of course, I will do the subscription stuff, but not the free stuff. So take care. Thank you very much, and I'll talk to you soon. Bye bye.